Hello traders, it's Danny LFX and I hope you guys have been making profit so far. So in today's video, I'm just going to be simplifying the breaker pattern for you guys. The breaker pattern has two trade stories to it. It has a liquidity sweep and a change of character. That is what makes it so powerful, and that is my only entry pattern that I seek out for. Nothing else, nothing more, okay? And in today's video, I'm going to be simplifying it for you. Okay, so let me just use a path to delineate this concept further. So in a sell side scenario, we're going to have a swing high, a swing low, when the swing high gets taken, and then the swing low gets taken. Then we have our breaker block. This is supposed to be the breaker block normally, but I have two case scenarios, okay? So if this particular breaker block, the lowest wick of the breaker block, if it aligns with a fair value gap, I'm going to be taking that as my entry, then expecting price to continue lower, okay? That is type 1 scenario, okay? So in the type 2 scenario, we're going to have a swing high, a swing low. The swing high gets taken, the swing low gets taken. If the breaker block here does not align with a fair value gap, we are going to be taking the last fair value gap on this particular leg that took this low, okay? We're going to be looking at the last fair value gap on this particular leg that took this low, okay? So for instance, it's going to be somewhere within the leg, but it's going to be a bit higher. So somewhere here. And then we're going to be expecting price to continue lower, okay? Those are the two major types of scenarios, okay? There's also a scenario type 3 where we have some sort of structural liquidity in form of a swing high. So we're going to have a swing high, a swing low. The swing high gets taken, the swing low gets taken. Then we're going to have some sort of retracement here, then something like this. Then we're going to take this liquidity in form of this swing high, tap into the last imbalance, then continue lower. This is the A+ type of setup that I'm always looking for. If it has some sort of structural liquidity, that just solidifies the trade idea, okay? And that is exactly what happened in this particular trade on USD CAD. Okay, so as you can see on the daily time frame, we had a sell side fair value gap here, which is a non-breakaway gap. You know, a non-breakaway gap is a type of fair value gap where we have the first candle do anything it likes. The second candle is a large expansion candle, and the third candle just has to consolidate. You know, it just doesn't have to close below this particular candle, and it has to leave a gap behind. So this fair value gap passes the criteria perfectly, okay? So what we're gonna do is when price taps into the fair value gap, we're gonna scale down to our lower time frame, which is our hourly time frame, okay? Now we're gonna look for that exact same pattern, okay? So what do we have here? Let's just use a path to simplify it. As I said before, we're gonna have a swing high, a swing low. The swing high gets taken, swing low gets taken. Then price retraces back to the last fair value gap. In the case that this one doesn't overlap with the fair value gap, we're gonna retrace to the last fair value gap and expand lower. Or as the case may be, if we have some sort of structural liquidity, we have a swing high, a swing low, the swing high gets taken, the swing low gets taken, we form some sort of structural liquidity, then price ultimately takes it out, then continues lower, okay? That is the best type of setup you can possibly find. In this case, let's analyze price and see what happened here. So we had a swing high here, then a swing low. The swing high got taken, and the swing low got taken. But in this case, we formed some sort of structural liquidity. We formed some sort of structural liquidity in form of this swing high here before continuing lower. So now what do we expect? We expect price to retrace back to the last end of the fair value gap, which was this particular point, okay? Since the breaker block itself did not overlap with a fair value gap, we're going to be taking the last fair value gap in the leg that broke the structure, okay? So which is here. And as price came here, it moved straight to take profit. No waste of time. No waste of time. Straight to take profit. Okay. So now let's go look for a buy side scenario where we had this sort of structure. Okay. That's it for the sell side. We're going to be looking at the buy side now. Okay. One simple thing to note. Okay. So while seeking out for our breaker pattern, when we have a swing high, then the swing low, from the swing high to the swing low, we're not going to be expecting any sort of short-term highs or intermediate-term highs from this point to this point, okay? It just has to be a straight move from a swing high to a swing low, a clean move, okay? Then once the swing high gets taken, swing low gets taken, we look for our entry pattern. That's it. Let me just use gold to further explicate this concept, okay? We had a trade on gold. You don't have to overcomplicate it, okay? So this line here was a daily fair value gap. We had price come here, created a swing high, a swing low. The swing high got taken, and then the swing low got taken, okay? Why did I not take this trade? Because in the leg, there is no fair value gap. Although there is a tiny fair value gap here, which I'm supposed to have taken normally, but it didn't really pass the eye test. You know, if you can't just see the fair value gap straight up, if you just have to zoom to actually view the fair value gap, that means it's not necessarily a fair value gap, in my opinion. It's not necessarily universally agreed on, so that is why I wouldn't have considered this a fair value gap. To be honest, I actually took the trade and took a loss on it, but now I realize that it didn't really pass the eye test. So we have to wait for another breaker pattern. And whatever breaker pattern you're looking for, it has to be on the most external part of the move, okay? So for instance, we could also class this as a swing high. Then we can class this as the swing low. Remember what I just told you. So from the swing high to the swing low, we're not going to be expecting any sort of short-term highs or intermediate-term highs within this move, okay? Just from here to here, we don't want to see any sort of short-term highs or intermediate-term highs. If we see a short-term high or an intermediate-term high, we could see it as a sort of retracement, okay? And we don't want any retracement in our pattern. We just want a swing high straight to a swing low, then the swing high gets taken, then the swing low gets taken. That's all we want to see. Nothing more, okay? So in this case, we could class this as a swing high. You could class it as a swing low. But since there's no intermediate-term high or short-term high, we can just continue lower to the next swing low, which is this one. So our first leg is from this swing high to this swing low, okay? We had a swing high, a swing low, then we had the swing high taken, then we had the swing low taken. That is just all we need to see, okay? A swing high here, a swing low, the swing high got taken, then the swing low got taken. Remember, what is our criteria? So if the breaker block overlaps with a fair value gap, we're going to be taking the breaker block itself. Otherwise, we're going to be looking for the last fair value gap in this particular leg that broke structure, okay? That confirmed the change of character. In this case, we didn't overlap with a fair value gap, but we did have a fair value gap in the leg higher. So we're just going to be taking it from this point, okay? Our sell limit's going to be from this point. This particular point, that's where we're going to sell from. This point here that is marked, okay? So that is just our entry pattern, simplified. Nothing more than that, okay? Once you just master these concepts and practice it, you're going to be a millionaire trading, I'm telling you. So now our stop loss is just going to cover the most recent highs, as the case may be. Then we're going to target the next draw on liquidity, which I believe was this low, the daily low. And we took it with speed, okay? I'm just going to show you another example on this before we move to the bullish scenario, okay? We're just going to look at a trade I took on NZDJPY. Just to further explicate the concept, make it a bit simple for you guys. Okay, so as we can see on the daily time frame on NZDJPY, we had this sort of fair value gap here, which I would classify as a breakaway gap, which is my preferred type of gaps to trade, okay? So we're just going to mark out this gap with a horizontal ray. Then when price stung into this fair value gap, we're just going to go to our lower time frame, which is our hourly. So if you remember, if you're using the daily time frame as your higher time frame, your lower time frame is going to be your hourly time frame, nothing less, okay? So what did we have here? We had a swing low, a swing high. The swing high got taken. No, we had a swing high, a swing low. The swing high got taken, the swing low got taken. But in this case, we didn't have any sort of fair value gap in the leg lower. So we're going to ignore that and wait for more price action, okay? Then what did we see here? We had another swing high and then a swing low. We had another, okay, sorry. We're not going to classify this as structure because we had a swing high to a swing low. We got another high, and there were some. Oh, the swing high if this never got taken. So if we view structure this way, if we view that we had a swing high here, then we had a swing low here, which is really valid. A swing high to a swing low. There's no sort of intermediate term highs or short term highs from this leg to this leg. Swing high to swing low. Swing high, swing low. We got the swing high taken. Then we got the swing low taken. That confirms our breaker pattern. And remember, it's part of the most external move because this is the highest point. It's still part of the move. Swing high, swing low. Swing high taken. Then the swing low got taken. It got taken by a wick, but it still counts as a breakup structure, okay? So since this low that got taken didn't overlap with a fair value gap, we're going to be taking the last fair value gap in the leg that took out this structure, okay? So where is the leg that took out this structure? This leg. This leg. So the last fair value gap is here. So that's where we're going to be setting our short position. Then aiming for the next draw on liquidity, which is going to be our daily low. This is the highest possible probability setup you could find in the market, okay? At least on this pattern. So we're just going to be covering the highs, like I said. You could cover either this high or this high. It's up to you to manage your risk, but you should always set a decent stop loss because price can be very tricky sometimes. Then we move straight to the draw on liquidity, which was this point. Very straightforward trade. Immediately it hit, it just went straight to take profit, no waste of time. So that is the highest probability type of setup you could find in the market. This one didn't really have some sort of structure. Okay, this one had structural liquidity, okay? We had a swing high, swing low. The swing high got taken, then the swing low got taken. This swing high is a form of structural liquidity. I don't know if you can see it. This swing high here is a form of structural liquidity just above the POI, which is this point, okay? And that's what made the move go so fast. When we have structural liquidity, we normally expect the price to move to the draw on liquidity very, very quickly, which it did here, okay? We also have another example on AUD JPY, but let's just go straight to the buy side scenario, okay? Now we're gonna look at this on EuroCAD. There's a trade I took on EuroCAD. We're just gonna be looking at this quickly so we don't waste much time. Okay. So on EuroCAD, let's take this particular trade for instance. Since we had this strong bullish fair value gap up, let me just remove all the drawings. Okay, so we had this strong bullish fair value gap to the upside. Then the third candle was a consolidation, which passes the criteria for our daily fair value gap criteria, okay? Then we're going to mark out the fair value gap. Then now we're going to focus on this thing. So now once price visited that fair value gap, what did we have here? We had the pattern we were looking for. On a bullish scenario, we're going to be expecting a swing low, a swing high, the swing low gets taken, and then the swing high gets taken. Then we come down to either the breaker block or the last fair value gap, then move up, okay? It's just the same thing with the sell side scenario. It's just flipped, okay? So now we have a swing low confirmed. We have a swing low, a swing high. Now from the swing low to swing high, on the buy side scenario, from the first swing low to the first swing high, we're not going to be expecting any sort of intermediate term lows in the leg or any sort of short term lows, okay? Just straight from swing low to swing high. Then we're going to wait for the swing low to get taken and then the swing high to get taken. That confirms our pattern. Okay, so now in this case, we had the breaker block overlap with a fair value gap. So our entry was going to be directly from this breaker block. Directly from this breaker block, okay? This was going to be our entry. And we're just going to set our long position accordingly. Then as you can see, price respected it, then pushed to the upside before we finally hit our draw on liquidity, which is this high. Okay, so it's just really not more complicated than that. So with practice, you're just going to get really good at it. Okay, so I recommend you guys rewatch the video and sort of try to understand the concepts, then try to apply it on your charts, then you'll see significant results and improvements. Okay, guys, without further ado, we're just going to end the video here. Then don't forget to check out my other uploads. We also have some important information you could benefit from, which is completely free. So I'll see you guys in the next one.